All right, if you're in Bitcoin right now, you need to listen up. There is a huge decision coming out of Japan this week that could honestly be one of the most dangerous days for the market all month. And the crazy part? We've seen this exact same pattern play out 3 times already.
So that's the big question, right? How on earth could one single decision happening thousands of miles away in Japan have the power to crash Bitcoin by 30%? Well, it's not random, I can tell you that. There's a powerful financial machine working behind the scenes here, and it's something most investors just don't see coming.
Okay, let's just look at the history, because the pattern here is, well, it's pretty undeniable. Back in March, the Bank of Japan, the BOJ, they hiked rates. And what happened? Bitcoin dropped 27%. Okay, then in July, they did it again. Bitcoin fell 30%. Fast forward to January of this year. Same story, a 31% drop. That's 3 for 3. And now, this week, they're meeting for a fourth time. You know that old saying, history doesn't repeat, but it sure does rhyme? To really get why this happens, we have to pull back the curtain on this massive, kind of hidden global financial engine that's been fueling the markets for years. Let's talk about something called the yen carry trade. So what in the world is this yen carry trade? For decades, it's basically been a fire hose of cheap cash for global markets. Just picture it. These huge funds borrow Japanese yen for practically nothing. We're talking near 0% interest. Then they take all that super cheap money and pour it into assets that give them a way better return, like US stocks and, you guessed it, Bitcoin. What's so wild is how simple this trade is and how violently it can all fall apart. Step 1, borrow yen for free. Step 2, go buy something like Bitcoin. Step 3, profit from the difference. Easy, right? But here's the catch. The part that triggers the crash. When Japan raises interest rates, that free money suddenly isn't free anymore. The loans get expensive. And that forces traders to sell their assets and sell them fast to get the yen they need to pay back those loans. This isn't just regular selling, it's forced selling. And that's exactly what causes these sudden, brutal market drops. Look, this isn't just some theory I'm cooking up. Let's dig into the evidence, because right now, the market isn't just whispering about a potential crash. It's practically screaming it from the rooftops. And check this out. This number tells you everything you need to know about how certain the market is. These prediction markets, where people are literally betting real money on what's going to happen, are putting a 98% probability on a rate hike from the Bank of Japan this Thursday. That's not a guess, folks. That's the market telling you this is a done deal. And you better believe the big players are not waiting around to see what happens. They're already making their moves. First off, Bitcoin's already down 8% from its recent high. Second, we've seen a whale, that's a huge investor, build a massive $89 million bet against Bitcoin. Third, more and more Bitcoin is flowing onto exchanges, which is usually a sign that people are getting ready to hit the sell button. And finally, you can see the risky money, the leverage, is leaving the market. Things like funding rates and open interest are dropping, which tells us people are closing out their positions. The chess pieces are already being moved. But here's the thing. This time it feels different. This isn't just another rate hike. This could really be the escalation point, the beginning of the end for a 30-year era of cheap money in global finance. I mean, just look at this split. Over here, you've got the Bank of Japan, finally tightening its belt and raising rates after 3 decades of printing easy money. And over here, you have the US Federal Reserve, which has been cutting rates to try and stimulate its own economy. This creates this incredible squeeze, because as Japanese rates go up and US rates go down, the whole reason for the yen carry trade, it just gets crushed. And that forces even more selling. So this is the point right here. For 30 years, my entire lifetime, the entire global financial system has been built on one single core assumption. Japanese yen will always be cheap. That bedrock belief is now cracking. And when a foundational rule that has stood for that long finally breaks, markets have to reprice, well, pretty much everything. Okay, so we've covered the why. Now let's get practical and move to the what. This is your 4-point watch list, the exact numbers you need to be monitoring this week to see how this whole thing is playing out in real time. First up, let's talk about the price of Bitcoin itself. Just think of $85,000 as the line in the sand. If Bitcoin breaks below that level and, more importantly, stays below it after the announcement, that's a really strong signal that the historical pattern is kicking in again. Number 2, you've got to watch the currency market, specifically the yen versus the dollar. The key number here is 155. If the yen gets stronger and breaks past that 155 level, the carry trade unwind is going to accelerate like crazy. At that point, the trade becomes a total nightmare. Not only do traders have to pay more interest on their yen loan, but the yen itself that they need to buy back is now more expensive. They're getting squeezed from both sides, and that forces them to sell even faster. Third, we gotta look at the bond market, specifically the yield on the 10-year Japanese government bond. All that is the interest rate the government pays to borrow money. If you see this number tick above 2%, that is a huge red flag. It's the market telling us that this isn't just one rate hike, but the beginning of a whole cycle of them. That would be the final nail in the coffin for the carry trade. And finally, for all of you who are deep in the crypto world, keep an eye on the funding rates for Bitcoin futures. If these rates flip negative, it means short sellers are piling into the trade, betting on the price to go down. When that happens, it builds up a ton of pressure in the market, which can lead to a massive, explosive price move, one way or the other. So now that we have our watch list ready, let's zoom out for a second, because this event on Thursday, it isn't the end of the story. No, it's just the beginning of the unwind. Now, I know exactly what some of you are thinking. Hey, if there's a 98% chance of this happening, and everyone sees it coming, then isn't it already priced in? It's a fair question. It's the most common argument you'll hear, but here's the problem with it. Knowing that something is coming doesn't stop the actual mechanics of what has to happen when it arrives. I mean, the same thing was said before the last 3 times this happened, and Bitcoin still cratered by about 30% each and every time. Expectations are one thing, but forced to selling is a whole different beast. And that's why the most important thing to listen for on Thursday isn't the rate hike itself, it's what the Bank of Japan says about the future. Their forward guidance, their language, that's what will tell us if this is just a one-and-done adjustment or if it's the start of a long, painful tightening cycle. This is all about the path forward. Which brings us to our final thought. This isn't just some one-day market event. This is potentially the start of a multi-month regime change for global money. The cheap cash that has been propping up asset prices for decades is being turned off at one of its main sources. So the question isn't just about what happens on Thursday. The real question is, in a world without cheap money, what happens next?